When investing in a triple net lease or NNN property, the paperwork is crucial. Every clause, term, and condition in the lease agreement can impact your investment's profitability and risk. In this video, I'll break down the key documents of an NNN lease so you know what to look for before signing. Let's get started. The NNN lease agreement is the core document between the landlord and tenant. This contract defines all responsibilities, payment terms, and conditions of the lease. Let's break down the critical sections. First, identification of parties. It clearly states who the landlord, lessor, and tenant lessee are. Confirm the legal names of both parties to ensure enforceability. Next, property description. This section includes the exact address and a legal description of the property. It may reference an exhibit or appendix with detailed property specifications. Then we have lease term and renewal options. This part specifies the start and end date of the lease and details any renewal options. NNN leases often run for 10, 25 years with multiple renewal options. Pay close attention to the renewal structure and whether it benefits the landlord or the tenant. Now let's talk about rent structure and escalations. This includes base rent, the fixed rent amount paid by the tenant, and rent escalations, which define if and how rent will increase over time. A well-structured lease includes automatic rent escalations, protecting landlords from inflation. One of the most crucial parts is NNN expense responsibilities. It confirms that the tenant is responsible for property taxes, insurance premiums, and maintenance and repairs. This section defines how these costs are calculated and paid, and specifies who handles disputes if costs increase. Be sure the lease explicitly states the tenant's responsibility for all NNN expenses, leaving no room for ambiguity. In addition to the main lease agreement, there are several key supporting documents that must be reviewed. First, tenant financial statements. If the lease involves a corporate tenant, financials confirm their creditworthiness. This includes balance sheets, income statements, and tax returns. A strong NN lease investment depends on a financially stable tenant. Always request and review their financials. Next, the SNDA, Subordination, Non-Disturbance and Attornment Agreement. This document protects tenants if the property is sold or foreclosed, ensuring the tenant can continue operating under the lease terms. An SNDA agreement is crucial, especially when the property has existing financing. Then the estoppel certificate. This document, signed by the tenant, confirms that the lease terms are accurate, preventing tenants from later claiming they had different agreements. Lenders and buyers often require estoppel certificates before financing or purchasing an NNN property. Finally, the property condition report. This report documents the current state of the building at lease signing, protecting both landlord and tenant by clarifying maintenance responsibilities. A property condition report helps prevent disputes over maintenance obligations. Certain clauses in an NNN lease can significantly impact your investment. Let's break down the most important ones. The default and remedies clause defines what happens if the tenant fails to pay rent or violates lease terms, specifying landlord remedies like late fees, lease termination, or legal action. A strong default clause protects landlords and ensures quick action if rent isn't paid. The assignment and subleasing clause determines whether the tenant can assign or sublease the property and may require landlord approval before transferring lease obligations. This clause is crucial if the tenant plans to sell their business or transfer their lease to another company. The capital expenditure, CapEx responsibility clause, defines who handles major property upgrades like roof, HVAC, or structural repairs. Some leases require landlords to cover structural repairs while tenants handle minor maintenance. Be clear on who is responsible for CapEx to avoid unexpected costs. The termination and early exit clauses outline any early termination rights for either party, including buyout options or penalties for early exit. If a tenant has an early termination clause, understand how it impacts your investment. Before signing an NNN lease, conduct thorough due diligence. Review all lease documents with a real estate attorney, confirm tenant financials and creditworthiness, and verify all property taxes, insurance policies, and maintenance agreements. A strong lease protects your investment. Never assume that standard leases cover everything. Always customize terms to fit your needs. NNN Leases offer incredible investment opportunities, but the details in the lease documents make or break the deal. Always review every clause carefully and consult with professionals before signing. If you found this video helpful, hit that like button and subscribe for more real estate investing insights. Got questions about lease agreements? Drop them in the comments below.